You hit a record on bookings, revenue more than doubled. Dig into some of the trends here. What was so different about this quarter than the last few quarters when it came to supply and demand?
Well, to some extent, it's a continuation of the last few quarters, but we're really hitting a scale point here. Like you said, $29 billion in gross bookings, up 36% on a year-on-year basis, as it relates on a constant currency basis. Our EBITDA, $362 million, well above our guidance range. And the guidance that we gave forward was well above street estimates, et cetera. So an indication of anticipated strength coming. And then a really important factor for us is we're free cash flow positive, $382 million in free cash flow, which is a big positive factor in our being self-sustaining and profitable going forward. And when we look at the environment, the marketplace is more balanced. The number of new drivers that we're adding in the US is up over 70% on a year-on-year basis. Surge is down. ETAs are down. So the business is really hitting on all cylinders, and it's reflected in the stock price, which is great.
Dara, thank you. We're looking at live pictures from Taipei, where House Speaker Nancy Pelosi's motorcade has just arrived at a Taiwan hotel. We're going to keep monitoring, of course, her big visit to Taiwan. I do want to ask you a little bit about the broader environment, Dara. I still hear people say Uber is expensive, and we're seeing Uber benefiting from this when you look at your earnings and the bottom line. How do you think about this dynamic longer term? Do you worry at all about alienating customers when they're already getting squeezed, given that this is the worst inflationary environment in Uber's history?
Yeah, I think inflation is hitting all of us, whether it's grocery prices or fuel prices. And remember, fuel is a big component of our driver costs. So that affects Uber prices as well. And you do see it in our results. While trips were up 24%, which is really, really healthy growth. Gross bookings were up faster than that, which indicates some inflationary effect on our results. I think the good news for us is that surge levels are actually coming down, ETAs are coming down. So as the marketplace becomes more balanced, we actually see strength in terms of trip growth going forward. And we're hoping if we do our jobs, and so far so good in onboarding more and more drivers, that prices on Uber will ease going forward. At the same time, drivers will make really strong earnings as well at the same time.
We've heard so many dire warnings about the economy. Jamie Dimon has said he's preparing for an economic hurricane. I just spoke to Apple CEO Tim Cook, who said, he plans to be deliberate in Apple spending. You've said in the past that you think Uber is recession resistant. Do you still believe that if we continue to see these downward trends? And what is Uber's strategy to navigate continuing downward trends?
Well, I think you're certainly seeing it in our results, which is there have been a bunch of earnings results out there, and sometimes they've been less than great. I think Uber's earnings have been terrific in every way. Top line growth, profitability growth as well. At the same time, we are being disciplined in terms of how we grow going forward. This is why our margins are improving so much on a year-on-year basis. Free cash flow is now positive as well because of the scale that we have. Because we're in multiple businesses, both in mobility and delivery, I think we have the kind of business that can perform in all weather. But at the same time, we are being disciplined in terms of costs to make sure that as the environment, if it gets tougher, we are prepared. The other factor that I point out too is that you have seen, during the pandemic, huge amount of spend went into retail and out of services. Now we're seeing the reversal of that. Money coming out of retail and into services. And Uber is the ultimate service company. And we're benefiting from that. So you can expect us to perform better than the overall environment, certainly this year. When we look at next year, we have to be careful because those comps can go against us, which is why we are bringing real cost discipline into the business, growing top line and a bottom line.
So tell me a little bit more about what you mean by discipline. Could that impact hiring? Any plans for layoffs or cutbacks on staff, as we're seeing at other tech companies?
I think the good news for us is with top line growth of 36%, certainly no plans for layoffs, but we are being more disciplined in terms of headcount growth. So we're adding headcount to key areas. Let's say Uber for business salespeople. That part of our business is growing very, very quickly. Or advertising business, which is a very, very high margin business and growing as well. So we're adding heads selectively to parts of the portfolio that are growing in really strong and powerful ways. Otherwise, we're at scale already. We are going to leverage costs, both variable costs and fixed costs going forward. And I think this environment that is demanding more discipline, it's the perfect environment for Uber competitively.
Dara, good morning. It's Guy. Picking up on that point, how much of current spend do you think is discretionary?
You know, we do have a fair amount of discretionary spend in terms of marketing spend or incentive spend. We continue to have driver sign-on bonuses or guarantees as earnings are elevated to make sure that drivers feel safe onboarding onto the platform and then see the earnings, the great earnings for themselves. So there's certainly some discretionary spend, and you're seeing that in terms of the margin efficiency of the company. Our gross profit margins, for example, are up year on year, and our fixed costs are growing at much slower rates than that 36% gross bookings growth rates.
We are speaking with Uber's CEO, Dara Khosrowshahi. I'm joined by Bloomberg's Emily Chang on Bloomberg Television and Radio. Dara, you talked a moment ago about growth markets. Let's talk about markets where maybe you are not seeing that growth. Where are you reevaluating right now? There's been some conversations, certainly I've heard, talking about the idea that maybe you could withdraw from India.
Oh, those conversations are entirely false. We've said it a bunch of times, and I'll say it again. Our India business in terms of mobility is performing at excellent rates. We're very happy with that business. We did exit India delivery business. We didn't think we could be a top 1 or 2 player. And there are certain markets, Brazil, for example, on delivery, where we decide to get out. Essentially, if we don't think we have a chance to get to number 1 within a reasonable cost, we will look to be disciplined in terms of our portfolio. But when you look at our portfolio, both mobility and delivery, both are growing at healthy rates. We're either number 1 or number 2 in the markets that we compete in, and we're very, very confident going forward. And to be clear, we are staying in mobility in India. We love the market.
So, Dara, are you confirming there that you're selling your stake in Zomato? I mean, we've heard that a big shareholder is selling. This is the big food delivery company in India, and there are reports that Uber is selling its stake.
Yeah, no comment on those reports one way or the other.
Okay. So let's talk about the markets, to Guy's point about where Uber might not be growing as much. You mentioned on the call that West Coast markets are taking a little bit longer to come back. And I'm thinking about San Francisco and how it's been a struggle to get workers back to the office. How are you thinking about this? And Uber's, for example, Uber's own flexible work policies. Do you see the flexibility that you're giving workers holding up into next year, for example?
It does feel like a tale of two coasts. You know, when we look at the East Coast, New York, Miami, even cities, Atlanta, Austin, Dallas, our business is coming back, is roaring back at this point, and we feel great about that business. Now, the San Francisco markets, Los Angeles, Seattle, they're certainly coming back. But when you look at the absolute levels versus pre-pandemic levels, it's a very, very different story. And, you know, we'll keep pushing, and we will do our part to make sure that we got ample supply in those markets, and the service works very well. As it relates to Uber, you know, we believe in two things. One is we want people to get out, and getting out means going back to the office as well. And at the same time, we believe in flexibility. So we are going with a hybrid model. We're encouraging employees who don't want to be remote only to come in 50% of the time. And I will tell you, when you get together with your workmates, especially in a world and an area where you're working as hard as you are as it relates to Uber, especially as you care so much about your impact, getting together in person is a great jolt of energy. I very much believe in it, but ultimately we want the best of both worlds.
It's going to get more competitive out there. You've got Amazon investing in Grubhub. What do you think that means for you?
Well, we're very confident of our delivery business, grew 12% on a year-on-year basis, constant currency, and our share in the U.S. has been very, very consistent. The focus for us is to drive profitability of our delivery business. So we had a record quarter in terms of profitability, 99 million in EBITDA, and we expect that profitability to increase going forward. In terms of Amazon and Grubhub, we've seen zero material effect on us. We work with Amazon, for example, in Japan, and because of our global scope and scale, we have a lot of chances to work with different players. Amazon is a great company, and we'll look to work with them however we can.
Now, if there was an area of weakness, you could say in the report, I'm looking at delivery bookings missed expectations by about $1 billion, and you're forecasting it'll be flat for the current quarter. Given just how big a part of the business this has become post-pandemic, do you think a slowdown in delivery could potentially drag down the rest?
Well, I think that the slowdown that we're seeing in delivery is really a measure of the comps, right? Last year, the delivery business was growing unbelievably quickly. If you look at delivery growth in the U.S., Uber Eats grew 25% year on year. Our overall U.S. delivery business grew 21% year on year. The growth rate that we're seeing internationally is affected by comps the year before. And if you compare delivery to 2 years ago, both the U.S. and international are growing at an annual rate of 40+%, which is super, super healthy. So we're big believers in delivery. The focus this year is really to drive profitability. We are at scale. We're the number one or number two player in the vast majority of markets that we compete in, and it's time for delivery to get profitable, and we are going to lead in that aspect.